From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 10th, 2018. Today we're taking a look at the AUDUSD, the Australian versus the US dollar for today's trade analysis. We're looking here at the daily time frame. I really want to go back in time to the left-hand side of the chart where the black circle is, and you can see that historical support there. If I scroll back just a little bit, you can see that it was a significant reversal point down there where the black circle is. The market was going down, found support 3 days, and then began a reversal back in the uptrend along the blue trend line. So a significant area of trading decision where sellers exited and buyers entered and began to take back control of the currency pair. So it's an important decision zone. 0.7490, 0.7510 is the zone we're looking at, highlighted in pink. Now we bring that back to our current time, and we can see currently we've seen a different scenario. Instead of bouncing off of it and reversing and going back up, even though it found support there for several days, instead of bouncing and turning around and going back up, it's now pushed underneath that pink shaded area, giving us some expectation, not a guarantee, but some expectation that the market's changing its sentiment about the Australian dollar. Instead of finding support here, we're now underneath it. Within the pattern of our current trend, which is a downtrend along the downward facing blue trend line here, we are seeing resistance into that same area, 74.90, 75.10. So what we're looking for in the direction of the trend is for the market to continue to hold here as resistance and continue the current pattern. What do I mean by the current pattern? Well, if I zoom in a couple of times, I put these boxes here on the chart to help us recognize the pattern within the trend. We saw the market falling, black box, 3 or 4 days, went into a period of congestion, consolidation, ranging, whatever you want to call it. It found a period here between the yellow and the purple zone where it bounced around for a few days, finally breaking underneath the yellow zone, and then it did the same thing here between the yellow and the pink zone. 1, 2, 3, 4, 5 days bouncing around between the yellow and the pink zone, support yet pink zone, resistance yellow zone, and that's inside the blue box. And then just a few days ago, we saw the market break under the pink zone. So in a similar fashion, I've put this red box here to represent a potential area where we look for the continuation of the trend pattern. Congestion, breakout lower, congestion, breakout lower. Now we're looking for that congestion to build in again. Now that's, again, not a guarantee. The market could reverse. It could break back above the pink zone, which changes the trend pattern, and we look for it to go higher. That's the risk in the scenario. But as long as it stays within and under that pink zone, the pattern of the trend is fairly clear here. Resistance is expected in the direction of the trend. We look for it to challenge the support, which happens to be the green zone, 74.50, 74.25. And of course, a breakout under the green zone and continuation back down to the next support level, the blue zone, down towards the 73.95 level. We look for a continuation of the trend. And again, the risk is pretty simple. We don't want it to get above that pink shaded area. So if we're going to trade the pattern of the trend and the strength that the US dollar has seen over the past many weeks, as recognized by the dollar index, we're going to look for a short here into the pink shaded area underneath the blue trend line and this pink shaded area. Risk and stop loss goes above the pink zone. That way we're limiting the potential impact to our account if the market changes the sentiment, the trend, and starts to turn back higher again. We always want to sell at a higher price, and so this is what we mean by that. A retest of resistance, not selling at the green zone, but selling at the pink zone, and looking for the continuation of the downtrend. Again, the risk is the market breaks back above the pink zone, so your stop loss goes above to limit the impact to your trading account if the market doesn't do what we expect it to do here on the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.